Hey people, Mike Martins here with the Mike Martins channel. Kind of feeling a little bit under the weather, but I'm feeling a little bit better. Uh, this is the last day here, and I want to throw a quick video up of the how we've deregulated our banking system the last 14 years, 15 years, and now today we're going to be paying this year, 2023. We're going to be paying for it through a lot of financial strife. There's going to be a lot of problems. Now, they deregulated the banks to allow bankers and I guess controllers to go in there and start adjusting rates to artificially dangerous low rates. They primarily did this because they wanted to get first time home buyers in the markets, but they couldn't afford the 5% overnight rate. So they had to basically lower the rates down where your bank accounts weren't paying you any more money. They used to pay you 5, 6, 7, 8%. Remember ING Direct? Save your money. Well, those days are long gone, but since the deregulation of the banking system, let's go back to that again because it's very important. And allowing banks to basically blindside the average Joe Donuts or the average guy that believes that his bank is protecting him. His bank is always there for him. His bank is there like Johnny on the spot with the ammo. Anytime he needs something, his bank is always there for him. So these people don't worry because they believe that the banking or the banking sector or the people working in the banking sectors will be punished if they break the law or they do something to his money. But little does he know, that little Johnny Donuts doesn't know, is that they won't be punished for screwing and basically dismantling and destroying something we had really good back in the 60s, 70s, and 80s. So now we got Swiss Bank reporting was $100 billion or whatever loss in 2022. We got the World Bank this morning sounding the alarm on today. I read the article today that we are going into recessionary territory. No, I'm sorry. We have been in a recession pretty much since 2015, 2016. We've been in a recession because it's been blanketed with cheap credit. And they blanketed the markets with all this free money and severely Frankenstein. Remember that video we made? Frankenstein rates. They created this Frankenstein monster that they don't know how to kill now. And it's out of control, and it's going to bring down the whole entire system. We are now entering into a depression. We are no longer in a recession. We are in a depression. People are going to comment below and say, Mike, what are you talking about? They changed the terminology, back after 1960s or 50s to depression, recession. It's the same thing. And no. Recession is what we've been in for a long time now. So the banks have to blanket this money all over the place. Cheap money and people using cheap money to get ahead and people using the equity in their homes as ATM machines to get ahead. But here's the problem. Someone's going to have to pay that back somewhere, somehow down the line. Now, with rates going up to hedge against the double-digit inflation, we need to start calling a spade here. Depression is your stuff is sitting out on the street because your landlord moved your furniture out, right? Your keys or whatever don't work anymore. You can't get into your place. You have to leave 200-300 miles to find a job, 500, 1,000 miles to do something. Oh, Mike, we have remote work. Trust me, things are going to start clamping down. Things are going to get. So what do? Well, for those that didn't over leverage and over borrow, they should be okay. For the people that bought a home to raise their family in, they should be okay. For people that borrowed into their corporation to build and grow their corporation instead of hollowing it out, right? We talked about this 4 years ago, where people basically create these shell companies, these corporations, and then hollow them out from inside out to take the wealth out, right? So as long as people did right by, not taking on too much and making sure, they have a bit of food in their pantry and they're, And that's why we were saying preparedness, getting ready and preparing. But banks are now sounding alarms that what they've already known back in 2017, 2018. They're all blaming what happened in 2020 with the you know what we can't mention on here. But my channel, I mean, if it gets taken down, you go on Odyssey and you could go back 7, 8, 9, 10 years, is proof that we've been struggling way before they pulled the trigger on the you know what, right? Which we called that we're going to do here already before. So banks are in a lot of trouble right now. Banking sector, banking system, bond markets, everything is out of whack right now. And why? It goes back to the deregulation of the banking system. And when they started to give the power, the Glass-Steagall Act, all this different stuff that was removed or deplatformed or not necessary, or and in the markets, in the bond markets, and in the stock markets. We talked about this very repetitively back in 17, 18. And now, I believe now that the banking world is going to crumble. No money laundering in the world is going to save the banking sector anymore. Banks were heavily dependent on money laundering. Economies were dependent on money laundering to keep them afloat. But I think now it's coming to an end. And I think we're going to start ushering in a hot war, because there's too much accountability on the table. And a lot of these world leaders, instead of 2017, 2018 coming forward with after the repo markets and after all the BS that was happening, they could have came forward and say, we screwed up, we're going to have to let this thing sink. No, they didn't. They went ahead and pulled the trigger on the you know what to prolong it even longer, because there's too much accountability on the tables. That's why we said Canada might not have another federal election, because there's too much accountability on the table from everything, from big pharma to medical to banking to money laundering to everything that's federal. It's completely broken. Anyways, guys, I wanted to talk about this because the banking, what are they going to do? Like, what are they going to? We'll see mass defaults ahead. That's a given. But I mean, how deep? Like, how far are they going to take this? Right? You saw how far they took it back at the end of 2019, early 2020, right? So, are we going to see, like I said before, we're going to see government-sanctioned murder? They are going around Canada telling people that they should have they considered euthanasia, right? So, anyways, guys, I don't want to get too dark on this video. That's all I wanted to say. I think it's coming. I think someone's going to pay the piper, and I think I could feel it. You could feel it. You could feel it when you're out. You could sense it in people. A lot of people are just severely over leveraged, and we'll see what happens in the end of this quarter of 2023. Let me know what you guys think. Depression, recession, banks, basically going off a cliff is what it is. Banking sector is going off a cliff. Let me know. Comment below. Mike Martin's here. I have spoken.